Ladies and gentlemen, good day and welcome to the Transformers and Rectifier India Limited earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Krishna Patel from Ernst & Young. Thank you, and over to you, ma'am.
Thank you, Zico. Good evening, everyone. I am pleased to welcome you all to Transformers and Rectifiers India Limited's earnings call to discuss the Q2 FY24 and H1 FY24 financial results. Today, from the management side, we have with us Mr. Satyen Mamtora, the Managing Director, and Mr. Chanchal Rajora, CFO and Advisor to the Board. Please note, a copy of the disclosure is available in the investors section of the website as well as on the stock exchange. Anything said on this call which reflects the outlook for the future or which could be construed as a forward-looking statement must be reviewed in conjunction with the risks that the company faces. Now, I shall hand over the call to Mr. Satyen Mamtora for his opening remarks. Over to you, sir. Thank you.
Thank you, Krishna. Good evening, everyone. We welcome you to the earnings conference call of Transformers and Rectifiers India Limited to discuss the company's performance during Q2 FY24 and H1 FY24. We concluded our board meeting today and uploaded the financial results and investor presentation on the stock exchange. I believe you may have got the chance to go through the same. There are certain developments and updates that took place, and I shall begin by highlighting the same. In October 23, the company successfully raised 120 crores by way of preferential issue on private placement basis. The infusion brings comfort and confidence on the prospects of the company and in the medium term provides capital support to ensure smooth operations. Another such positive development is JETCO has begun releasing stalled payments from third week of October in tranches. Thereby, we expect reduction in receivables to a larger extent in H2 FY24. The order book continues to be strong as on 30th September 2023. Unexecuted order book is to the tune of 2,145 crores, with 35% of the orders from central utilities, 11% state utilities, 40% from industrial customers, 9% from renewables, and 6% from exports. We foresee renewable segment as an essential growth driver in the near future. During the quarter, and the company received new orders worth 314 crores, growth of 23% year-on-year basis. Going forward, we anticipate reasonable growth in order inflow. At the moment, the tenders and inquiries for domestic market of value 2,741 crores are under negotiation or in bidding stage. Export orders worth 994 crores are under various stages of negotiations. Overall, an industry perspective, we are optimistic and confident of the growth potential in our product. The transformer industry is flush with orders and demand outlook is positive. With the end use in various industries, vis-a-vis railways, renewables, power, etc. Currently, Indian Railways is moving towards high-speed train that is leading to increased demand of transformers from 66 kV to 132 kV. Further, the demand is increasing from development of freight corridors, metros, etc. Happy to inform that we are one of the first manufacturers of Scott-connected and V-connected railway application transformers. In addition, India is a preferred transformer supplier for US-Europe markets, and ongoing tensions in Ukraine and Russia has accelerated the transition, which is turning out to be in the favor of transformer manufacturers in India. As mentioned earlier, we are participating in export tenders and expect to increase the export presence in next couple of years. Strong demand from high growth end markets such as technology, data centers, EV charging networks, and renewable energy will place stress on grid capacity and resilience and require new modern transformers. Also, India plans to reach 450 gigawatt installed renewable energy capacity by 2030, with 280 gigawatt, over 60% expected from solar. This itself is a huge opportunity, and we see our company playing a pivotal role in this segment. I would like to highlight that we expect decent infrastructure development in green energy space, wherein we are the only transformer manufacturer in green hydrogen energy application in India. To summarize, in the current industry landscape, the company is positioned advantageously and expects to participate in the growth story of transformer industry. With this, I conclude my remarks, and now I would like to hand over the call to Chanchal Rajora, our newly appointed CFO and advisor to the board, for his opening remarks.
Thank you, Satyen sir, and good evening to everyone. A warm welcome to our earnings call. I shall summarize the standalone financial highlights for your quarter and half year ending 30th September 2023. During the quarter and half year, the revenue from operations was 254 crores and 408 crores, degrowth by 22% and 34% respectively. The decline in revenue was on account of the non-receipt of the dispatch instructions from few customers because of the non-availability of their inspection team. The company experienced short-term mismatch in working capital that caused delay in execution of certain jobs. Post infusion of funds, we are certain to streamline the operations during Q3 FY24. However, in Q2 FY24, there is an increase in revenue from operations by 66% as compared to the Q1 of the current year. During the quarter and half year, the EBITDA was 21 crore and 27 crore, a degrowth by 35% and 51% respectively. EBITDA margin is 8.21% in Q2 FY24 and 6.52% in H1 FY24. In Q2 FY24, there is an increase in EBITDA in absolute terms by 263% as compared to the Q1 of the current year, with an EBITDA margin of 8.21 as compared to 3.73 in Q1 FY24. During H1 FY24, the export turnover was 22 crore, comprising 5% of the revenue from the operations. The company has a customer base spanning over more than 25 countries worldwide. Unexecuted order book as on 30th September 2023 is rupees 2,145 crores, a growth of 57% over H1 FY23. New order received during the quarter, rupees 314 crores in H1 Q2. That concludes an update on the financial highlights of the company. I shall now request the moderator to open the floor for the question and answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Nilesh Doshi from Green Lantern Capital, LLP. Please go ahead.
Yeah, hello. Thank you for taking my question, Satyen and Chanchal.
Good evening, sir.
Good evening, dear. First question is like the order book, what you have of 2,000 crore. What is the delivery schedule for this order book? Like, till what period you expect this to be delivered?
This is in the span of 18 months, 18 to 20 months.
Okay. The second question is, since the first half we have gone through because of working capital issue.
Yeah.
So, by now, how much is the amount which we still yet have to receive from JETCO?
From JETCO, still had to receive kitna?
Sorry. Nilesh bhai, the JETCO has started making the payments in last week of October only.
Okay.
Right? Yeah. So we have a sizable amount pending with them, which we expect to receive in this half of the year.
Okay. And the next is that typically we have been doing about 1,100 to 1,300 crore revenue last 2 years.
Yes.
Okay, bearing this first half, is it possible to reach that kind of level in this?
We are hoping that we should cross, we should be above 1,350, close to about 1,400 this year.
This year. So
Yeah, 1,400. We will be touching 1,400 this year, sir.
Right. So, and if you observe your competitors, I think what we have observed is this Q2 result, most of them an EBITDA upward of 15% in the transformer division segment.
Yes.
So, do we see us reaching that kind of margin going forward?
Yes. Yes, Nilesh, we are quite hopeful to reach that margins.
Yeah. Okay. Thank you for my question.
Thank you, sir.
Thank you. Our next question is from the line of Riken Ramesh Gopani from Capri Global. Please go ahead.
Hi, sir. Thank you for taking my question. Sir, I just wanted to understand, if you look at the gross margin performance in this quarter compared to either the first quarter of this year or the second quarter of last year, it's actually deteriorated. So while I understand that operating margins are impacted by the leverage given the lower top line, but what has impacted the gross margins during the current quarter versus compared to the same period last year and Q1?
What is his name?
Riken.
Basically, there were certain expenditures which is incurred in this quarter due to the retesting of the certain transformers, and that has basically affected our margins in this quarter. Right. So there are almost 10 transformers of Jetco we had to bring in and retest them, and all that fall in this quarter. That has basically eaten up some kind of EBITDA margin there.
But is this what you mentioned, the retesting cost, is it sitting in the cost of goods sold line item, or is it in the other expenditure?
It will be sitting into the cost of goods sold item because they are directly related to the transformers which has been supplied to the Jetco.
Okay. Yeah. Okay. So it's in a way, it's sort of fair to say that it's a one-off cost related to these retesting?
Yes, sir.
Oh, okay. Could you give some quantification of this retesting cost?
I don't have often right now the number, but yes, if that would have been not there, we would have been crossing our last quarter EBITDA.
So your EBITDA is actually better than last quarter. Okay, I mean, okay, you're saying same quarter last year.
Corresponding quarter I'm talking about.
Oh, okay. So that's a significant quantum is what you're saying.
Yes, sir.
Understood. And sir, secondly, if you could talk a little bit about the overall opportunity on exports and what is the kind of bids that we have made, and what kind of orders do you expect during the current year, and what margins do you think you can achieve in the export orders?
I'll tell you the export market is right now, basically there are two different rather than three different kind of export opportunities are there. One is the opportunity which is coming on the IDT transformer sides, that is mainly coming from US and Europe, and this is a huge opportunity which is basically in the pipeline. Another export opportunity what we have a regular export base, what we do it to the African markets and the Middle East markets. And the third is the export opportunity which is coming from the countries like Russia and Ukraine. As of now, if you see in our presentation also, we all have around 900 crore rupees orders which are under the negotiation, and we expect the sizable amount of these orders are going to be come in this half only. Right, and apart from that, today only we have got a very good inquiry from another African country, which is 800 crore order. So that also we expect that this is a 24-month scenario, but we expect those kind of orders keep coming into the system. What we are targeting is around 20 to 25% of the order book from the export market in coming next 2 years' time. As far as the margins is concerned, the export market margins are much higher than the indigenous market pricing. Vis-a-vis, we also have basically the very good payment conditions from the exports.
Okay. Got it, sir. And just lastly, in terms of, what you see as the execution capability in the current capacity without achieving any CapEx, could you outline that what is the size of top line that we can achieve with our current capacity without any major CapEx?
Without any CapEx, we can reach up to 2,500 crore top line.
Understood, sir. Okay. And what's our CapEx plan, if you could outline that also?
We have a CapEx plan of 50 to 60 crore rupees in next financial years, and mainly for the IDT and green transformer side.
Okay. So, sir, let's say if you have to take this top line to 5,000 crores from here, what kind of CapEx do you think you would have to put up for?
We haven't evaluated that much as of now. We are going step by step. First, we wanted to reach to first milestone, then we'll think about 5,000 crore line.
But roughly, I mean, is there a thumb rule in terms of CapEx or something that you can suggest?
No.
Okay. All right. Thank you.
Thank you. Our next question is from the line of Mihir from Carnelian Capital. Please go ahead.
Yeah, hi, sir. Thanks for giving the opportunity. Sir, wanted to understand on this JETCO. I mean, so we have started...
Mr. Mihir, may we request you to use the answer, sir? There's an echo in the line.
Am I audible now?
No, sir. There's still an echo in the line, sir.
Is this better now?
Yes, sir. Please go ahead.
Yeah, sure. Yeah, thanks for giving the opportunity. Sir, lastly, wanted to understand on the JETCO side, and we have started to get payments from end of October. So, I mean, will we start getting the orders also from JETCO? I mean, that was my first question, and when should one see that happening? Second was on the 2,100 crores overall pipeline which is there. So, I mean, does the international part of 900 crores form part of this 2,100 crores, or is it over and above that? And on the domestic side, I mean, what is driving the demand? I mean, this, domestic pipeline. So, what all forms part of the domestic pipeline?
After another, please, because
Yeah, sure.
you are slightly fast. And JETCO, we are currently working on getting the stop deal revoked. It shall take some time, so maybe another month or so. We are hopeful that there will be some clarity on the stop deal. And what was your second question?
Sure. Sir, second question was on the 2,100 crores of pipeline which is there. So does this include the international number of 900 crores, or 900 crores is over and above that?
900 crore is the orders which are under negotiation. It is not the firm. It is not in our order book.
Correct. But you are also having tender pipeline of 2,100 crores, right?
Yeah.
2,700 crores.
2,741 crores is domestic market, and 994 crores is export market. These are two separate entities.
Two separate things. Exactly. Understood.
Thank you.
Sure, sir. Sure. Yeah, that's it from my side, sir.
Thank you.
Yeah.
Before we take the next question, a reminder to all participants, you may press star and 1 to ask a question. Our next question is from the line of Gunjan Kabra from Niveshaay. Please go ahead. Ms. Gunjan, your line has been unmuted. Please go ahead with the question.
Okay, am I audible now?
Yes, ma'am.
Yes, ma'am. Please go ahead.
Yeah. Okay. Thank you for the opportunity. I wanted to ask that sales guidance provided in the last quarter was also to grow with respect to Q3 FY23. But why is it that non-receipt of dispatch instructions from few customers that you guided led to a degrowth in revenue from with respect to Q2? So is this few customers, is this JETCO only or any other customers? By few, are there, how many customers are there here, and what is the value that did not get dispatched this quarter, which you expected to get delivered this next quarter? Also, this is also at a time, sir, when transformer sector is doing so well. So wanted to understand why is it so, people are not getting it dispatched, or if you can explain it little elaborately.
Ma'am, first of all, there is no JETCO delivery instructions in these orders. Secondly, let me explain to you the transformer industry is demand is there, but what happened, there is a process of dispatching the transformers. And before dispatching the transformers, there is always a customer inspection is there. And once the inspection is done, then only that transformer is clear for the dispatches. Right. The cases what we are mentioning is here, there are a few transformers were made, but since the inspection team was not available and the site was not clear, and that is the reason the transformer has not been lifted by the clients. And those are basically will be lifted in this quarter.
Sir, I got that. But sir, last quarter also we had the same issue. So is it just
Sorry
over?
to interrupt, Ms. Gunjan, your audio is not clear, ma'am. If you could please use your handset or ask the question from an area where there's better reception, please.
Is it fine now?
Yes, ma'am. Please go ahead.
Yeah. So I was saying, sir, that last quarter also this was one of the reasons for the sales getting declined. So is it, and if you can quantify what's the quantum of this order which has not got dispatched this quarter?
Around 40-50 crore rupees of transformers, you can say, are in that range.
Ms. Gunjan, do you have any other questions?
So you got the question?
No, your audio was not clear, ma'am. Yeah.
Sorry for the inconvenience. Is it fine now?
Yes, please go ahead.
Yeah, thank you so much. I'm really sorry. Sir, I wanted to know that last quarter also there was this problem of dispatch. The few customers you did not dispatch. So is this the same customers, or if you can quantify the reason?
No, ma'am. These are the different customers. These are based on, this is basically a normal phenomena in the industry, and it is keep happening, ma'am.
Okay. And my second question was margins also, that you guided it to be in the double digits this year. But this quarter also, because of the retesting cost that you just described, the margins got hit, and 7.66 is the EBITDA margin that we did. So how do you see this moving forward in the next quarter? If you can highlight maybe, and the guidance that you gave of 1,400 crores this year, which eventually means that 1,000 crores in the next 2 quarters. So when we do 1,000 crores, will the EBITDA margins also improve with respect to that? And do you think we'll be able to do this 1,000 crores in the next 2 quarters? Because
ma'am, as MD sir has just said in the last question, we are quite hopeful to achieve that. And if we achieve that, definitely the EBITDA margin will be improved. I don't want to comment on what percentage we will be achieving it, but EBITDA will be certainly improved.
Okay. Thank you so much. I'll get back in the queue.
Thank you.
Thank you. Before we take the next question, a reminder to all participants, you may press star and 1 to ask a question. Our next question is from the line of Manoj Baheti from Carnelian Asset Advisors. Please go ahead.
Hi. Thanks for taking my question.
Hello, Mr. Manoj.
We're seeing improvement.
Audible, sir.
Hello, am I audible now?
Sir, it's
Yes,
a little too loud, sir. If you could please use your handset, sir.
1 minute. Just give me a minute.
Yes, sir.
Hello.
Yes, sir. Please go ahead.
Yeah. So my first question.
Sir, your audio is not clear, sir. May we request you to rejoin the question queue? Thank you. Our next question is from the line of Ramesh Gopani from Capri Global. Please go ahead.
Hi, sir. Thank you for the follow-up. Sir, I just had one follow-up, which is just trying to get some color on the current order book. If we compare to what you have been achieving in terms of gross margins in the recent past, how are the incremental orders in terms of margins? And if you could give some color in terms of how's the pricing environment, and are we, given the current demand environment, seeing any improvement in the overall margin structure from the current order book vis-a-vis the order book that you had maybe 1 or 2 years back?
Riken, the present order book, what we have is on the is basically based on the RM factors, which is much better than what we had into the past, and that will add up into our margins as compared to the previous years. And if you see my presentation, the combination of the clients or buyers what we have, my dependability is reduced to the state utilities where we had a less margins, and it has increased to the industrial customers and the central utilities where our margin factors is quite high. So we hope that this will add up into the bottom line in time to come.
Got it. So it's fair to say that the gross margins themselves have a potential to improve, and over and above that, you will see a positive operating leverage. So that should drive very meaningful improvement in your operating margins.
You got it right, Nitin.
Okay. Thank you so much, sir.
Thank you.
Thank you. Our next question is from the line of Mahindra Jain from Way to Wealth. Please go ahead.
Yeah. Thank you, sir, for the opportunity. Sir, I will again ask the same question for GETCO. Sir, I'm audible?
Yes, you are audible.
Thank you. So as you are saying, like within a month or two, we will resolve the stop deal, this order from GETCO. So can we expect anything from GETCO side, any announcement like that, or where we are standing in the case of that inspection, and how many transformers are yet to be delivered to GETCO in that order, which you are saying we are receiving slowly a part payment? So this is my first question, and the second one is related to this only. How much this inspection report which are being stopped is affecting our new business? And sir, or post that issue, what order we have received, sir? Thank you, sir.
Right. So the stop deal, there is only one transformer that has not yet been dispatched, and we are yet to manufacture that transformer also. And I think within a month, month and a half, they will issue a circular that the stop deal has been revoked or something like that. But they will not be making an announcement. We will have, once they give us that, once they give us the revocation letter, we shall make the announcement that GETCO has revoked the stop deal announcement. Apart from that, there is no other business hindrance in terms of because of GETCO's stop deal.
Okay.
Mahendra, just to elaborate a little bit, after that post GETCO stop deal, we have got a substantial amount of orders from the central power utilities.
Okay, great, sir. So just and this is like, are they doing re-inspection to our transformers, or how they will be satisfied in a month? Like what process we are doing?
All the re-inspections have already happened. There is only one 500 MVA which is going to be re-inspected now. Other all re-inspections have already happened, and they are satisfied with the performance of the transformer.
Okay. Thank you, sir. Thank you.
Thank you.
Thank you. Our next question is from the line of Siddharth Shah from MK Ventures. Please go ahead.
Yeah, sir. Thank you for the opportunity. And sir, congratulations for the sequential improvement. So my question is on the order pipeline. You mentioned that there are domestic orders of 2,700 crores and exports of 900 crores in pipeline. So anything you can guide on what kind of order inflow we'll see in second half, because you are planning to execute 1,000 crores in terms of revenues? Or will the order inflow be higher than that? How will it be?
Siddharth, thank you for this question. If you see in last 2 quarters, we have got the order worth of around 700 crore rupees. Right. which is added up into my order book. And in the present order book, present negotiations things, if you see on our past performance side, we'll be expecting around 20 to 25% of the domestic order size, and export orders, we are expecting that almost all the orders will be materialized.
Sure. So that makes it equates to around 1,500 to 1,600 crores of order book order inflow in next 6 months or next.
We are basically targeting around 2,500 crore rupees order book by end of this financial year, apart from the whatever we have planned for this year.
Sure. And my second question is on JETCO. So on how much is the balance amount to be received? You will see that most of this amount will be cleared by in second half. How much is the receivable amount which is due now after what I received in October?
Siddharth, we have basically, as I told you, the JETCO has started giving the payments from the last week of October itself. Let's say after 20th they have started, and they have just released around 33 crore rupees. And balance is all in pipeline, and we expect that a substantial amount of this will be issued in this second half of the year.
Sure, sir. Okay, that's it from my side. Thank you and all the best, sir.
Thanks, Siddharth.
Thank you. Our next question is from the line of Mihir from Carnelian Capital. Please go ahead.
Yeah, thanks for giving the opportunity. Sir, lastly, wanted to understand on the working capital side and the
We are not audible at all.
Mr. Mihir, may we request you to use your handset, please? So your audio is not clear. May we request you to rejoin the queue, please? Thank you. Our next question is from the line of Anil Thakkar from Jalanch Advisors. Please go ahead.
Hi, good afternoon. Am I audible?
Yes, yes.
Yeah, I just wanted to know the fund-based facility available and its current utilization. Fund-based and non-fund-based.
Anil, we have fund-based limit of 160 CR, which is almost 163 CR. And presently, it's almost 100% utilized. And we have another non-fund-based limits you were talking. We have around 650 CR of non-fund-based limits available with us, and which is also majorly it is used for the bank guarantee purpose, and the balance is used for the raw material procurement size.
Right. So after this our preferential issue and everything, we would have received the funds, and that is used in the working capital, and still fund base is also currently 100% utilized. Is that understanding correct?
Yes, sir.
Right. Got it. Thank you.
Okay.
Thank you. Ladies and gentlemen, you may press star and one to ask a question. Our next question is from the line of Vijay Shah from TL Investment. Please go ahead.
Yeah, hi. Thanks for the opportunity. My question is, since we have already raised money and we are also expecting GETCO payment, so how do you expect interest costs to trend in second half of this year, and what is likely interest cost for FY25?
Mr. Shah, if you see that even in the quarter 2, our finance cost has gone down, and coming in back to your question in H2, we are basically expecting a substantial decrease into the finance cost in the final figures.
Yeah, but can you just give some idea that what kind of cost? Because it is very difficult for us to calculate, because there will be a lot of costs which are related to bank guarantees, which we will not be able to figure out.
Bank guarantee and LC is going to be remain there. The substantial reduction what we are expecting is in the bill discounting side. Because of the working capital issues, we had to use the bill discounting facilities to pay off to our suppliers, which was somewhere around 10.5 to 11%. And we are basically expecting that will go down drastically. And that way will impact, say, if my present finance cost is 5%, we will be able to reduce it. I'm giving you an example. It will come down to less than 4%.
Okay, so maybe next year the cost will be like more like 40 crores, between 30 to 40 crores.
Yes, sir. Yes, sir. Yes, sir. That's
Okay.
right.
Thank you.
Thank you.
Thank you. Ladies and gentlemen, you may press star and one to ask a question. Our next question is from the line of Mihir from Carnelian Capital. Please go ahead, sir.
Yeah, am I audible now?
Yes,
sir,
Mihir.
please go ahead.
Yeah, sure. Thanks for giving the follow-up. Sir, I wanted to understand the working capital on the export side. I mean, how are the working capital terms on the exports business? And second question was on the order book. The order book that is currently sitting, out of that, I mean, how much is exports, how much is domestic, and how is the raw material cost across both of this, both of these divisions of exports and domestic in the order book?
Mihir, like we said in our presentation, are you talking about the orders in hand, UEOB, or are you talking about the orders in pipeline?
No, so basically for working capital, I wanted to understand as a whole, even in the something which is sitting in the order book and also for the pipeline which is there. So I mean, wanted to understand gross margins on the exports as well as working capital on the exports.
Okay. Mihir, as far as working capital cycle is concerned into the export order, working capital cycle in export order is always much better than the domestic market because most of the export payments are either on the advance or LC side. So that leverage we will have it in that way, and we have a better margins in the export orders as compared to the indigenous orders. As far as the present order book share of export in the present order book is concerned, you can see in our presentation it is around 6% of the total order book is onto the export side.
Sure. Understood. Yeah. Yeah. That's it from my side.
Thank you.
Thank you.
Thank you. Ladies and gentlemen, that was the last question of our question and answer session. As there are no further questions, I would now like to hand the conference over to Mr. Satyen Mamtora for closing comments.
Thank you everyone for being part of our earnings call and participating in the call. Thank you for your support in us. We wish you all very happy Diwali and Saal Mubarak. We hope we have been able to answer most of your queries. In case any further queries, you may reach out to us on Investor Relations Advisor, Ernst & Young, and they will connect with you offline. Thank you very much, everybody.
Thank you. On behalf of Transformers and Rectifier India Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.